February 7th, 2024. Something I thought was interesting today is we raced right through the 4,000 or the 5,000 number. And 5,000 is obviously a very important magnet. It's a big round number and it's one of the bigger round numbers since it's a thousand. So it was a really important magnet and we raced right through it today and formed an open gap and we never got back to it. So most likely within the next day or two, I think we're going to come back and test this 5,000 magnet. We also had an open gap with yesterday's high, so we did have two early open gaps today. But it kind of resulted in a trend day. We had a trend basically from the open and then a trading range for the rest of the day, which happens sometimes. Um, but I really thought it was interesting that we raced right through 5,000. Additionally, one of the reasons I think we're going to come back to it, obviously, because it's a big magnet, but we're just so overextended in the short term here that I don't think we're going to go all that much higher. It just seems a lot more likely that we're going to end up getting a reversal back down at some point. And you can see this bar; it's trying to break out of the we have a top of a channel line, and it's about to try and break out of it. And even if it breaks out for one day, I think it's going to end up coming back. So we're just overextended to the bull side and we raced through an important magnet. So all of that stuff makes me think that we're probably going to get a pullback within the next day or two to that number. Bear bar one, a bear bar closing near its low with the big gap up. Imagine it as a big bull bar. So essentially a low one short below one, but really not all that good. Follow through on bar two. So technically it's sell to close for the bears, but there's tails on the top and bottom of one and top and bottom of two. So it's really not as good as it could be. And what do the bears want? Well, they want a big breakout to the downside and to get to yesterday's high, which would be, the magnet. But I don't really think it's all that likely it's going to happen. And you get a big follow through bar, a big bear bar on three. And three looks like a really tempting sell because it's always in short and it's sell to close. And all of that stuff is true. But one and two had big tails on the top. And if you look and you really think about it, one and two is essentially forming a channel, right? And what you're getting here is a breakout attempt below the channel on three. And what do are breakout attempts below channels all that high probability? Not really. So we're probably actually going to get a fairly deep pullback. It's pretty unusual that four is going to be a big bear bar as well. So while, yes, it is reasonable to be short on the close of three, it just looks like a breakout below a channel and it looks climactic. So I'd probably rather sit out. Reversal up on bar four for the bulls. It's noticeably strong. So again, that should, make you be thinking, okay, this is probably a trading range day. Generally, trading range days have double tops and double bottoms. You can see, or on the opens, you can see 3 and 5 were a double top and 4 and 6 were a double bottom. But big bull reversal bar up on four, we might form a lower high because 1 through 3 was pretty strong, but I'm not sure, how much further down we can go because this bull bar was so big and strong. A reversal down on bar five. It's a double top with 3, so maybe a reasonable sell below 5. But I think the big question to ask yourself, I think there's two things. One, I guess I would say three things. My first problem with that, well, okay, four things. So my first problem with it is that you're selling in the middle of a tight trading range, which really isn't all that great. My second problem would be if you sold to close at 3 and you got 4 and you scaled in, now what are you thinking? You're thinking, well, these traders might get out around break even. So it's really hard to want to sell to close a 3, scale in on 4 and feel happy about 5 and want to stay in. Most of those traders are going to exit. My third problem with it is how strong bar 4 is. If bar 4 is so strong, it's such a big, strong bull bar. Why are we getting a bull bar that's this strong? If we're going to collapse and get a big bear trend or some sort of big bear move, which is essentially what you're betting on here, if that's what's going to happen, then why is 4 so strong? And my last problem with it would be, the bulls who buy below 4 are probably going to make money. It might be good enough for a scalp, but I just think that, the bulls who buy below 4 are probably going to make money. So even if we do start to go down, I don't think it's going all that far. Reversal up on 6 for the bulls. So we have a double bottom and a double top. The bears have decently strong bear closes, but if it's bearish, then why are these bull bars so strong? And the reality is it's not that bearish. And if it's not bearish, it's probably going to go sideways to up. And, I was thinking worst case scenario, we're at the bottom, in the lower part of what's probably some sort of trading range forming. So 6 is a reasonable high too. However, 5 was a pretty strong bull bar and might be enough for its own second leg. So it's probably going to be sideways to up. And when it's sideways to up, it means we could get a little bit more to the downside. And then you get bar 7. And I wouldn't sell bar 7. I wouldn't exit longs below it either if you bought above 6. Buying above 6 is probably fine, but my problem with it was we're still decently above the moving average, so it's kind of hard to want to take that buy. But if you did buy above 6, I don't really think you can exit below 7. because 7 is the third push down, right? So first push 1 through 3, second push 5, third push 7. So it's 3 pushes down, and we have 2 really strong bull closes. So I don't think it makes a whole lot of sense to exit below 7. Probably buyers below. Additionally, look what happened with 4, right? Bulls weren't interested in buying above 4, but they bought below 4. So bulls might not, again, be interested in buying above 6, but they're probably going to be willing to buy below 6. Why? Because this is probably a trading range at best for the bears, since these bull closes are so strong. So again, bulls bought around a 50% pullback, maybe a little lower here. And then you get an outside up bar on 8. And the bears who sold below 7, disappointed in 8, probably getting stopped out above 8. And the bulls who, there would be some bulls who bought above 6 and disappointed in 7, exited, and they're thinking, oh no, I'm trapped out, and they might buy again above 8. And that might be what's causing such a big move up on 9. And you can see we went right through 5,000. I thought we were probably going to pull back and test 5,000. And I thought that the bears who sold above the high of the day were going to be able to get out of break even, but neither one of those things happened. We got follow through for the bulls on 10, but a tail on the top, so a bit disappointing. More follow through on 11, so it's by the close. It's probably by the close 9, always in long 9. Follow through 10, maybe by the close 10, by the close 11, by the close 12. It is by the close on 12, but this is a tight bull channel, and we're getting a strong breakout above the tight bull channel. So traders are probably going to be looking, more to exit. We're really far away from the moving average, and it's unlikely that we're just going to continue to race all the way away from the moving average without getting a pullback first, especially when you're this far away. So, and something else to note is that the bulls who bought above 11 were able to make 5 points on, basically on 12 and during the start of 13. So if you're buying above 11, you're probably buying thinking that, you're probably going to get a deep pullback here. And then you just kind of get a gift of 5 points on 12 and 13. And so when that happens, traders, a lot of times, assuming that we're probably going to get a pullback, just accept the gift and take their profits. Reversal, really just profit taking on 13, in my opinion, and a pullback on the tail of 13. So 1 pullback, 2 legs down to 14. But nothing to really sell, but nothing to really buy either. I think traders probably going to be looking to buy a deeper pullback. This should get a couple legs sideways to down. 15, a high one, but not that good. Big tail on the top and the bottom, and you're buying in the middle of the range. Follow through for the bulls on 16, which is okay, but again, not the best with the big tail. And you're buying essentially an entry bar for a doji. And you know that the bulls who bought this close are going to be disappointed in this, so they're looking to get out around break even because they haven't had the chance yet. That's exactly what 17 does, is it lets those traders out around break even, and you get a big reversal down 17. Do you sell 17? Probably not. The bears haven't really done anything yet today. Pretty much every, bear bar has been a trap. So, it doesn't really make sense to sell 17. You might get to the moving average, but I just don't think it's worth taking. Big tail on 18, disappointment. Big tail on 19, disappointment. And if you look where 19 got, the bears who sold below 17 were able to make exactly 5 points. So they sold 17, expecting to probably have to scale in higher, and they got a quick 5 points, 18, 19. And so they took it. So again, something to keep in mind, this is probably a trading range at this point because traders are scalping with 5 points. None of the stop entries look all that great. So probably expecting a trading range. Reversal up, bar 20, high 2 above 19, but not that good after 3 straight bear bars. Probably the bears who sold above 19 are going to make money. 21 trades back to the 19 high and does find some buyers because the bears who sold above 19 kind of disappointed with how big 20 is. So they're buying back their shorts at break even. 22, it's a low 1 short for the bears, or essentially it triggered the low 1 short below 21. It's a 3-bar reversal. Bulls see 1, pullback 2, pullback maybe 3, and some sort of wedge forming, and bears see a low 1 short in a bear channel. But the bear channel isn't all that tight. I don't think we're going that much lower. You could argue this was some sort of truncated wedge, 1, 2, 3, or you just look at it as 1, 2, 3, and then a reversal up. So follow through for the bears on 23, but really, it's a good pair of bars, but I just think we're towards the bottom of a channel, and this was so strong and definitely still has a lot of influence over the market, so it's really hard to want to sell. 24, probably sellers above 23, which you can see happened during 24. And reversal down 25, but it's another low 1 short. You're selling right on the moving average, and the bears who sold the close of 23, disappointed 24, probably going to try and get out around break even during 25, which they do, and that causes the bounce on 26. I thought 26 was an interesting trade. You can buy above 26 for sure, but this was a deeper pullback than the bulls wanted for sure. So it's a wedge bottom on the moving average, yes, but if you're buying above 26, it's probably a minor reversal. you're hoping that, in general, bulls are hoping that this is a strong spike and we're going to get a big second leg up. But this was a really deep pullback. I mean, look, there was 3 straight bear bars, which is unusual, and then a big, strong pair of bear bars here. So you have a couple legs down, and it's a wedge on the moving average. It's a credible buy, but I just think that it's probably minor with how all of this has looked so far. So I'm not expecting 2 legs to sideways to up, definitely, but not sure how much higher than that we're going to go. Essentially, the bulls who bought the close of 16 don't have a chance to get out of break even yet, so maybe we get there. But I'm just not sure how high this is going to go. Follow through for the bulls 27, and I assume bulls made about 2-to-1 of their risk reward. Yeah, so they made almost exactly 2-to-1 of their initial risk, and that's where we went, which is enough for a swing profit. Follow through for the bulls 27. It's by the close, but you probably expect a deep pullback here. Traders are, interested in buying. Again, they've been buying pullbacks all day, right? So they're probably going to buy a 50% pullback of 26, 27, expecting another leg up because 27 was pretty strong. They buy the 50% pullback. They get a rally 29. So it's 2 legs up at this point. I wouldn't buy above 29. You're getting pretty high in the trading range. This is probably where traders will start to look to take profits, which they do during 30. 30 is a low one short, but it's really not all that strong. Probably buyers below, which there were during 31. Probably sellers above 31 since small bull bar. And you're getting into the point where it's a couple legs up, potentially 1 pullback, 2 pullback, 3. So reversal up 32, probably buyers not too far below. And you can see on 33, what did 33 test? What was the low of 33 testing? It was testing the 26 high because the bulls who bought above 26, they're, essentially 33 was seeing if they were willing to buy more, essentially around their break evens, where break even stops would get run. And you can see that's exactly where 33 tested, that breakout point, which is that high, and traders bought it. And, part of it expecting a second leg up from 29 through 32, probably going to get another leg, which we do. And then you can see 34, essentially that second leg up tests the 32 close. 35, a bear bar closing near its low. Bulls might exit. If you're still long, I think if you're buying above this, you probably got to find a way to get out with at least 5 points or take some off at 2-to-1 of your risk reward, or maybe even your true risk or something, because, in general, it's a trading range. And if you're buying 26, you have to recognize it's a minor reversal, I think. So second leg, so bear bar 35, bears hoping essentially spike and then trend line break, lower high, major trend reversal. Bulls hoping spike, 2-legged correction, second leg up. Follow through the bears 36, 37, 38, but tails 36, tails 37, tails 38. So it's 4 straight bear bars. So the bears are winning with time here, but now we're at the bottom of the trading range and they need a pretty sharp breakout. I actually thought for what it was worth, the bears might get the breakout. We are at the bottom of the trading range, which isn't good for the bears, but I really was thinking we were going to retest 5,000 and we might get back to this one high. So, while it wasn't the best to be selling in here, I wasn't super convinced it was totally unreasonable because I thought it was, reasonable to think we were going to get back to the one high. 39, a reversal up. It's a failed breakout below the low of the day. So any bears who were selling, the breakout, hoping for a swing down, disappointed, they might exit above 39. You'll notice we haven't broken out of the 18-bar range yet so far today, and we're probably going to. So some bulls might buy above 39, but hard to do. Disappointing follow through 40. Bull bar 41, but now you're getting high in the trading range. As things start to look clear in trading ranges, they tend to start to go sideways and get deep pullbacks. And then follow through on 42. And then you can see we got a big bull surprise 43 up to that new high of the day, which is essentially the magnet. And then a big reversal down. Why? Because bulls who were taking the buy knew it was probably minor. And this was 2 legs sideways to down. And they were hoping to get a breakout to the new high. But a lot of them, instead, they bought. They saw the breakout and they just exited thinking that it was a good spot to exit high, especially considering how climactic 43 looked when it was on its high. And you get the big reversal down. 44, a bull bar, you could argue it's a breakout pullback since you got the breakout, deep pullback, and the buy. And, 43 was a bull bar closing on its high at one point. So it's reasonable to think that this was strong enough to get a second leg. And do you buy above 44? I think you can. It's probably more of a swing trade, but I think it's okay. The only problem is you're kind of in the middle of the trading range, but you can essentially buy looking for a second leg up. Fall through 45, 46, but tails everywhere, reminding you this is probably a trading range. Disappointment 47, and then a big bull bar 48, but it's a bull bar. You're buying the breakout. You know, traders sold aggressively here last time, and it's 1 pullback, 2 pullback, 3. So it's a couple legs up. So I'm not convinced buying 48's all that good. Additionally, it's the best looking bull bar at the top of the trading range. So maybe more sellers there than buyers. And a disappointing bar, 48 or 49. Doji on 50, high 1, but I think bulls wanted a bull bar, and when they don't get it, they sell it to their longs, causing 51. Limit order buyers at the moving average. 52, a high 1, but you're high in the trading range at this point. At this point, this is kind of, you really don't want to touch any of this, I don't think. I think this is all just leave it alone at this point. Follow through for the bulls on 53, but towards the top of the trading range, and it's not the best follow through bar in the world. You probably want a bigger one. So we might go more sideways to down. Disappointment 54 and reversal attempt up 55. The bulls who bought above 53, disappointed 54, getting out around break even 55. Inside bar 56, but small bar, and you're buying essentially a tight trading range 53, 54, 55, 56, and you're buying high in a tight trading range. So I don't think it's all that good. Reversal attempt down 57 and follow through 58. Why are you getting the follow through? Well, the bulls who bought above 56, the bulls who bought above 56, disappointed in 57, are selling out around break even during 58, and that's what's causing this. It's a good bear bar closing near its low, 58, but what have the bears really done so far today? They've had some moves down, but none of it's really looked all that good. So I'm not that convinced they're going to get a breakout. I think the bears need a stronger bar, 59, and they're probably not going to get it. And that's exactly what happens, 59. But I don't want to buy 59. You're high in the trading range. Disappointment, 60. I don't really think, honestly, for the remainder of the day, there was anything that was all that good. You could argue as a wedge, 1, 2, 3, and maybe a sell 69. But, 62, you could argue 1 pullback, 2 pullback, 3, and essentially a breakout pullback from 52, 53. But really hard to want to buy, and disappointing doji, 63. You're getting lots of dojis in here. And when you get a big bar like 64, traders just scalp out, and that's the problem. You get an II 65, 66, so potential II final flag for the bulls. So I think it's okay to make an argument to sell 69 because it's a wedge and an II, so final flag and a wedge. So really not that good to be buying up here. And disappointment 69, some traders will start taking the sell. And you can see we essentially just went sideways to down for the remainder of the day. For stop orders, 6 is probably okay, but you have to be ready to sit through a pullback like 7, and you can't exit below it. Probably okay to buy above 8, by the close 9, 10, 11, 12. A couple legs sideways down. I think 26 is okay for a minor reversal. Maybe 44, but yeah, just really tough day overall, I think, for stop order traders. Like I mentioned, I think for the next couple days, we're probably going to get a pullback. I would be surprised if we don't close this gap, somewhat soon. I think we're probably going to get back to this high. The traders who sold above this high are probably going to be let out around break even. But we did go through the magnet, and on the weekly chart, more bull closes. This will probably be a bull close, but I wouldn't be super surprised if it wasn't. I suppose we still have 2 days left, so it could vary. This bar could very easily not be a bull close. I just think we're going to pull back. That's all. This is all so dramatic that I really wouldn't be surprised if we ended up getting a pullback. And yeah, that's the day.